So we are started. Anyway, I want to welcome everybody to the How to Make Money Trading Stocks Market Stock Talk show today. I'm Dennis Wilburn with the Active Trend Traders. We've got both David Grandy and Harlan Pilon from All About Trends. Welcome, guys.
Thank you for having us.
Good morning, Dennis. Good morning, everybody.
And, you know, guys, this morning when I got up, I get up about 5 o'clock in the morning, go for a nice walk around the wonderful little hamlet of Pleasanton, California, in the dark. Excuse me, it was one of my alerts going off. I don't know if you heard that or not. But I go around for a walk, and the first thing I do in the morning is I check my smartphone to see what the futures are doing. And when I saw what the futures were doing this morning, I just kind of went, well, crap. But then I read why the futures were doing what they were doing, and I had a different perspective. I want to remind everybody that what we talk about here is for training purposes only. And traders should always paper trade any new method prior to the risk of their own personal capital. As I got up this morning, Harlan and David, this cartoon kind of came to mind. The herd mentality, it's always been there. And
always is.
And over here, this little guy's on the phone. This was.
Did you hit the record button, Dennis?
What's that?
Did you hit the record button?
I did.
Okay, we're good. Just checking.
So anyway, this little guy over here, he says, I've got a stock here that could really excel. This guy listens, really excel? Excel? Sell? Sell? And then it goes nuts over here. Sell, sell, sell. And then down here, the same guy, guy kind of says, this is madness. I can't take it anymore. Goodbye. Goodbye, bye, bye, and the cycle repeats itself on the other side. And I found that very interesting this morning as I was looking at the futures, and I'm going, holy moly, the futures are up like 150 points on the Dow. And then I got to read the news a little bit, and well, guess what? China surprised us all by easing their coming in with their rates. Now, I'm sorry, guys, but there's got to be a connection. We stopped QE, but then a couple of weeks later, or maybe the same week, Japan starts its own QE, which isn't doing so good for Japan right now, and now China follows suit about 3 weeks later. It seems like there's something orchestrated that's out there that doesn't want this market to go down. You guys got any just real brief comments, guys?
Central bankers of the world unite. I mean, it's almost as if that's truly what it is. They're all in cahoots with each other, if you want to look at it that way. By the same token, we've seen what Super Mario says they're going to start buying asset-backed securities, which is their version of quantitative easing. When you hear that type of thing, my first thought was, well, better late than never.
Yeah,
so
exactly.
They're just a bit late to the party, and look at how long that we were doing it for, what, 2, 3, 4, 5 years.
Yep.
And here they're starting it, and they have bigger, much bigger problems than we ever did. When it comes to securities that have, virtually fallen off the face of the earth anyway. So issues with debt and things of that caliber. So, who knows if ours took 5 years, how long is theirs going to take?
Anyway,
so
just like I said, just connect the dots, and it's kind of interesting. I'm not saying there's a conspiracy theory out there, but who knows? Anyway, World Money Show. David and I are going to be down there, Orlando, Florida, February 5th through the 7th. We're speaking on the 7th. We're really excited. Again, I got one email from somebody down in, I think, the Fort Lauderdale area about coming and doing a presentation with them. I'll follow back up with you. If you know anybody in the Fort Lauderdale area, Dave and I would love to come and make a presentation to your group. We'll be talking about the art of trend trading And this also goes, David and I love to talk about stocks, and we can plug into your group either one or two ways, remotely via a webinar. I did a webinar for the Delaware IBD meetup this last Tuesday night. I had a great time. We talked about, where to find the really big stocks, fish for the big stocks based on a study I did that IBD interviewed me for on their radio show. And so David and I, isn't that right, David? We love to talk about stocks, and we'll go just about anywhere to talk about stocks, at least via the webinar. Yes, Dave?
That's correct. Absolutely.
Okay, so let's get going with the rest of the market review. This week, powering higher. Are we there yet? And is the market actually just kind of running right now on news vapors? S&P, new high, but divergence on the weekly chart, which is kind of interesting. The weekly charts are telling us that, hey, I'm ready to do some resting here. However, the oh, thanks, Anil. I just pulled up the question. The weekly charts are telling us that the internals are saying, hey, we're running out of momentum. Momentum is falling. And so we're getting these once in a while pops. When we take a look at the NASDAQ chart, I think the big question is, yeah, we made a new high for today fairly robustly, but it looks more like an exhaustion gap. The Russell popped up directly to past resistance and then fell from there and was dropping as we put together these slides. So outside influences and earning influence for next week, retails are going to be kicking off and getting started here over the next couple of weeks through the first or second weekend in December. Market is running on news vapors. Basically, you get a little whiff of some news and the market reacts. You see that a lot in some of the stocks that we follow, like Tesla, both to the upside and the downside. And then we just want to thank our friends in China for what they did today. I don't know if thank is the right word, but thank you, China. You, held off a sell-off for at least a little while. Here's where we were last week. We were asking some of the same question. We thought that the S&P was at a critical juncture, earnings, but isn't it interesting that comment that I made last week? We're one news story away from either a big drop or a big bounce. Hold on just a second. Okay. As of midday, the percent of stocks over the 20-day moving average on the NYSE are basically doing exactly what the market did. We had fallen from where we were last week, which was about up here in the 70 area, the 65 area. We actually fell and looked like we were going into at least a bit of a maybe a retracement all the way back down to the bottom, as it looked like the Russell was going to really participate in that nicely. Here's the rebound today. We rebounded up, and the percent of the stocks got up to about 65, and then have retreated, where it's at about 61%. Why is this an important chart? This chart has an uncanny ability when the amount gets below the 30 level of showing where a potential turnaround on the indexes are. And we've done a lot of studies with this particular indicator, and it's pretty phenomenal. You can find this at, I don't have my information on here as usual, but it's one of the charting programs, or charting applications that we use at one of the websites. And those who've heard some of our presentations before know exactly which one that is. So let's go to the charts. Let's see what's happening. And it's kind of cool doing this this presentation before the market closes. At least I think it is, because for one thing, we're getting to see the real live action on the in the market. And so while, yes, the candlestick hasn't closed completely for the day, it gives us an indication of what transpired, at least in the early mornings, and what looks like maybe happening as we move it towards the latter part of the day. Again, the S&P on the daily chart, which is here on the left, gapped out of yesterday's close after it bounced off the 8-day moving average, gapped, ran up, and now has run back down. Some of you who were on early, I don't know if you were paying attention to the to some of my reviews, but I was basically typing in on this one. This is a hanging man, and a hanging man. Correction, it's a shooting star reversal candle, where it is typically a bearish signal, and confirmation is if it in fact the bottom of it is broken, and it shows a level of strong resistance at the top of the tail. What are the weekly charts telling us? A couple of things. One is, even though we pushed higher very nicely this week, look what the momentum's doing. Still heading down. The true strength indicator, even though we are making a new high, the true strength index is not making a new high. It is basically what would be considered negative divergence. The stochastics themselves have in fact turned over. Now, I don't trade off of the, I don't use these for my trade signals, but I use them for secondary clues or confirming clues to say, hey, something's going on with the internals, especially with the true strength index and the momentum. Something's going on with the internals. Even though the market is making new highs, it may not have the same vigor that we would anticipate to really sustain this push upward. The NASDAQ. Got to go over here. Okay, NASDAQ. I was sharing with Harlan when we were first coming on, is the NASDAQ. While this in itself is not per se a bearish signal, such as a shooting star, dark cloud, bearish engulfing, at the same time it is a bearish candle because we gapped all the way up to about 42.85. That's where the NASDAQ started today, and the rest of the day it has been selling off. The telltale sign for everybody to keep an eye on is if we take out yesterday's close, that could be an indicator that it's time for the NASDAQ to really do some resting and perhaps come back and do a retracement back to either to the breakout area of 4,100 or at least 4,150 before it reverses and hopefully goes into a nice little Santa Claus rally. And so anyway, that's what I'm looking for there. Close this gap, close below yesterday's close, and that would be a great bearish indication, at least for a better pullback than what we've had over the last few weeks. I mean, it just, it's like the Energizer bunny rabbit. It just keeps going and going and going, not providing a real good entry point, and at the same time not providing a real good point to go, to go into a more bearish trade. The Russell, on the other hand, has been another story. There we go. Okay, Russell. Absolutely, if you took away yesterday's candle, Russell looked like it was heading, sliding down the slope after it had ridden the, like those guys, those of you who ski, it rode the what are those things called, the lift, the ski lift, up to the top of the crest, and then it was going to drop and slide down the hill coming the other way. However, China surprised us. However, where did it gap to? Look, gapped right up this morning to resistance, and has since reversed. Again, for this to be a strong bearish type signal that we're going to come back and do some retracing back down to the 1160 level or back down to the 200-day moving average, we need to close this gap, reclose below the 8-day, and push lower from there. Again, it could do a very similar type thing of pulling back, maybe, let me get my pencil, pulling back. Either now it's got a couple of different support levels, here, here, or here, and then perhaps, nothing's guaranteed, but perhaps then go into a Santa Claus rally towards the end of the year. But again, I think the market's going to continue to be a little bit whippy, simply because it's so news-driven right now. Is it considered a double top on the daily chart? Yeah, you could consider this and this because you've had enough of a retracement here that you could consider that a double top-like pattern, but it's definitely bouncing and retesting that resistance line. That's about the 1183 to 1185 area, Gary. So, David, that's all I have for today. I think we're going to be looking forward to an interesting week next week. Remember, it's a holiday week, shortened week. And so there is a bias with the market to trend towards the upside during a holiday shortened week. However, who knows? Uzbekistan might come out and do an economic program for there, and the market could react. That was kind of a joke, though. Anyway,
that's an area we haven't heard about lately or yet.
No, a buddy of mine who's from South Korea, he married a really sweet Korean lady who grew up in Uzbekistan, and that was really wild. And David, you ready?
I am ready.
I am switching to you, my friend.
All right. Well, thanks a lot, Dennis. So just recap our trading plan here. We don't chase stocks. We let them come to us. We buy support and sell resistance. We short resistance and cover at support. We just trade what we see, not what we think, hear, or fear. And what we're seeing, is the index is hitting some resistance levels now and pulling back, and that makes us a little bit cautious. We still have a lot of really good setups on the long side, so it doesn't mean those all go away. It just means that short term, we want to see where the market pulls back here, as it's likely it will be. So 3 things you need to know: uptrends and how to trade them, downtrends and how to trade them, and changes in trends and how to trade them. And uptrends has been very much that's what the market's in, and lots of setups have been more on the upside than on the downtrend side. This is Exact Sciences. We featured this in our newsletter yesterday. We actually initiated a trade on this, and here it is today, following through very nicely, up about 8% so far on the day. So again, we're just looking for stocks and confirmed uptrends and trading in a nice trend channel that are pulling back off of their highs in an orderly manner towards areas of support. And we've got lateral support here at the blue line and the 50-day moving average, and very tight trading here. And then today, voila, there you have it. The stochastics are short-term oversold, so lots of room for new buyers to come in here. So that's exactly the type of setup that we look for, and our watch list in our newsletter is full of those. As far as this is Fleet Core, we talked about this last week. Again, we have a stock that's a little bit more wild than Exact was, but it is in an uptrend. It's pulled back after a failed breakout, and then it kind of snuck up on us on Wednesday by because it made this huge move right like 5 minutes before the close on Wednesday, so we weren't able to do a trade alert on this, because by the next day, yesterday, you can see what it did, a huge move, and today another nice move up, and then it's just been like the index is fading here. So but it shows you the patterns work and the setups are there. And had it not, done that such a late day on Wednesday, we probably would have done the trade alert on it. So anyway, our watch list is full of these setups, and that's what we're doing. We're just focused on stocks that are in uptrends, pulling back off their highs, and putting up these nice patterns. And as they trigger, we take to trades. So if you want to trade in tandem with us and see our complete watch list, sign up for our 15-day free trial at our website. Most of you guys have already done that, I can see from the attendees list. But if you haven't, you really should take a look at it, because if the markets do pull back here off resistance, it'll set up even more pullbacks. The existing pullbacks that we have on our watch list will be even better patterns. So this is really a great time to get on board and see what we're doing here. And when the market does, should the market rally into the end of the year, as you suggested, Dennis, we'll be stacked with some really good positions here to benefit from that. So that's it, kind of short and sweet. It's really all about seeing what we're going to get from this pullback here and see if we do get that end of the year run.
Dave, that's awesome. The one thing I really admire about you guys, and I really appreciate, it is that, one, you do not chase stocks, and sometimes, and I oftentimes have the same. I don't like to chase stocks and try, to keep alerts to a minimum. That's, I do counteract that by trading a few options, selling options for premium and that kind of stuff to generate a little cash flow. But the thing about it is unless there's a really great signal or a proper signal, we do not, just throw out a trade just to throw out a trade. And so I commend you guys on that. And I know it sometimes gets frustrating for our members because they want to be able to trade today, but guess what? Just because we want to trade today doesn't mean that there is going to be something to trade today. You know what I'm saying?
Mm-hmm. Exactly. And we with today's gap up, it's tempting to just go out and do a bunch of trades here, but we have to be really, really patient. Only the best, forget the rest. Sometimes less is more. And we just try to make them do more with less. We just really want to focus on the quality setups. The Fleet Core was a really great setup. Unfortunately, the timing of things, kind of made that more of a educational example than a financial impact. But EXSS was an excellent setup. Very, very tight. Very, very prolonged uptrend, and we're seeing the results of that today. So. We never want to just trade for trading's sake, and sometimes you just have to be patient, and we've talked about that for many weeks, and now we're starting to get some reward for that.
Yeah, exactly. And, that's one of the things that as we were doing, okay, can you see, okay, whose screen? Do you have my screen or your screen, David?
I have your screen.
Are you looking at Tesla? Isn't that a pretty,
I was, now I see a baby.
Oh, that isn't a baby. That's my
terrible tour.
That is my granddaughter, Alani, in the pool over in Hawaii with us. And so that was really cool. And matter of fact, while we were there, Alani's mother and father told us that we're going to be grandparents again. And on my birthday, they told me that, guess what? It's a boy. So he's excited, I'm excited, we're all excited, and Alani is only 13 months, and so she doesn't know to be excited yet. So let's get in and finish up the recording so we can look at some stocks. Here's what we're sitting with. Here's our current positions, what we're holding currently. We are holding as well, not as a demonstration, but TZA, which is the inverse of TNA. This is, and when I sent out this alert to buy this particular ETF, I made sure that everybody knows that the inverse ETFs for the indexes, especially the leverage ones, can be severely impacted with what's called contango. I'll let you look that up on Investopedia.com. Contango and backwardation, which basically, because of the entities and the future contracts that they have to buy, when they renew them, they have to buy back at a higher cost than what they can sell them for, because guess what? The market has continued to go up. So the underlying TZA drops in price, and that's why when you look at some of these two-time or leveraged ETFs, they can lose money even though the stock price is still going down. But normally you can hold them for about 3 to 6 weeks without the contango being a huge impact and effect. And I don't know if I just had an alert go off in my ear, and it's a klaxon. You guys can't hear the klaxons, can you?
I heard it. I heard it.
What's that, David?
Dive.
Okay. Oh, I want to go look. No. Anyway, here's what we're sitting at. We've got that. We've got a cover call position going in Tesla right now. And then here's where
that one's really dropping as we speak. I mean, it's gone down 3 points since we started the webinar.
Oh, cool.
That's the klaxon.
Okay, well, we sold that.
You don't have to look, Dennis.
We sold that yesterday at $7.15, and we'll buy it back at about $1. Anyway,
it's 242. It's trading at 242.50 right now.
Ah, cool. So margin count, we're up 27%. IRA count, we're up 50.8. We're hitting about a 60 to 60.7 and 63.6%. And our objective is to hit a yearly winning percentage of 60% with an average return of 40% for the year. One of the things, guys, we talked, those of you members of Active Trend Trading who were on the Wednesday night training webinar, we provided a lot of the background information about these early warning alerts for power index ETFs utilizing Traeger's triggers. My trading colleague and research partner has done a great job of going back and checking and doing 12 years of the research on these, and I just want to make an announcement now. It has an uncanny level of accuracy over 12 period for long entries on index ETFs. Now, during some period of time there was only the single ETFs, and then the leverages came around about 5 years ago. But greater than 80% winning trades over a 12-year period. 3 to 6 alerts per year, and thus far in 2014, a compounded return of 89.9% trading TNA. That's based on 5 trades, 1 winner and 4 winners and 1 loser. The launch date for this is going to be November 28th. The day after, and that'll be the special launch date primarily for Active Trend Trading members at a deeply discounted amount. And if you want early details on this, on this service that this new service that we're launching, please email me directly. And Mike and I will be recording a background recording and placing it on the Market Tech Talk channel. We'll have it up there on Wednesday, November 26th. And then the background details will be on the website. I'll be working this weekend to get all the background information on the website November 24th. But I am, like I said, those of you who were on the webinar on Wednesday night, the training webinar, I don't want to be overly excited, but at the same time, I just, the engineer in me was going, my goodness, this is, like I said, uncanny, the level of accuracy. So the rest of what we do at Active Trend Traders, our objective is to provide a clear, simple trading system for busy people so they can become wise, profitable, and winning traders. Premium subscription rate is $49.99 per month, which is about a $300 value with all the training and alerts you get. But you can always email me directly. If you will email me directly, you can get a discounted rate. So with that, folks, Harlan, David, thank you so much. I'm going to open this up to questions and looking at